aggressive wave C buy on the pound yen. This is the pound yen 5-minute chart. And we can see over here some sort of a top. Also, we have a head and shoulders pattern that represents some sort of end of the bull trend. So over here, we are going to start looking for a 5-way move down. And we can see 1, 2, 3, small 4, and 5. But in total, we have a 5-way move. But over here, what was really important is that we had another 5-way move against this bearish trend. And only time when we can see 5-way move down and 5-way move up tell us what? First of all, they tell us that this should be some sort of a 5. But we know that after a 5-way move, we should be able to see a 3-way move and not 5. So this 5-way move should be a part of some sort of larger wave A, and that automatically call for the zigzag correction. And we know at this stage that after a 5-way move up and call this the wave A, we are going to have a 3-way move pullback and another 5-way move higher. Let's go and label this on the chart real quickly. Let's call this 1, high 2, this drop 3, make this a little bit bigger. This move looks more like some sort of a triangle like this. This is a triangle in the wave 4. And after that, we have here the wave 5. So after a 5-way move, we expect what? 3-way move higher. And over here we have 5. So let's label this smaller move with the smaller 1, 2, 3, 4, 5 so we can separate them later. So let's go and call this 1, 2, 3, we have a 4, and 5 over here that end the larger wave A. So we need to check the rules really quickly. First rule is that wave 2 needs to hold above the starting point of the wave 1. Okay, that's true over here. After that, wave 3 needs to be larger than the waves 1 and 5, and in this case, we can clearly see that this third leg is the longest of the 1, 3, and 5. So that rule is also valid. After that, wave 4 hold it above the territory of the wave 2, so we can say that this is a perfect impulsive pattern. So after this, we are expecting a pullback. Since this is aggressive trading and a 5-minute chart, we are just going to use a Fibonacci retracement and try to trade this as zigzag because we had a perfect 5-way move up. So all we need to do is to draw a Fibonacci retracement from start to end of the wave A, and we need to watch for the 50 and the 618 as our entry points. So 50% would be our entry 1, and the 618 would be our entry 2 level. For the stop loss for both trades, we are going to use the 100% or the starting point of the wave A, however we want to call it. Because after you draw a Fibonacci retracement, this 100 level would represent the start of the wave A. So let's just put the horizontal line over here just to be sure what happened. And after that, you can go and find the targets. For the wave C target, we know that wave C should go to equalize between wave A. So we are drawing a Fibonacci expansion from the start to end of the wave A and projecting from the end of wave B. But let's assume we don't have or don't know where the wave B is going to end. So in that case, we would just draw a Fibonacci expansion from start to end of the wave A and put this default 50% pullback to guide us what is going to happen next. So this 100% at 180, 190 would be our target points. So after that, we had a perfect 3-wave move over here, but price continued to push lower, and right now we can see that the wave B found the support and ended at 180.106, so few pips below our second entry that was at 180.110. This is the shape of a double tree correction, but you don't need to care about that right now, because you are filled and you know that your stop loss is at 180.83. So after that, price continued to push higher. Once we tested 100%, both of our position should be closed, because that's the take profit for the both position. But let's go and check, and let's check one thing, because we know that the wave B didn't end at the 50% and the wave B ended at 180.106. The smart thing to do would be, once wave B end, you redraw the Fibonacci expansion and move your targets to the 100%. So in this case, we won't look at 180, 190. We would start a trade initially with 180, 190, but during the trade go on, we would move the stop loss to 180, 179. Now, if we remove this, what we need to check is this: how much waves we have in the wave C, because we know we should be able to see 5 waves to the upside. So we go with 1, 2 over here. After that, we have a smaller 1, 2, because this cannot be a 3, it's too small. 1, 2, 3, 4, 5 to complete the larger wave 3. Let's move it over here. After that, the pullback should be the wave 4. And after that, the wave 5. So we have a complete zigzag correction around the equal legs. Okay, so our trade would go perfect and we would make, let's say, around 70 to 80 points against the 25 points risk. So that is more or less around 1/4 risk reward. And you can't say that's not good enough. And we just need 1-2 to 1-3 to make our trade happy. And this was better than 1-3, and I think this would be the perfect trade. So after a 5-wave move down, 5-wave move up, you can always go and try to take a position at the B-wave pullback, because we know that we can trade the wave C. I'll see you all in the next example.